Boom. We are alive, ladies and gentlemen. This is Tio and the Arcane Bear. It is good to be back with you again today. That's right. Whoa, what happened here? Did light go red behind me? Jesus. Hold on, guys. Sorry, this means the power went. Let's fix this. There we go. We are still bullish. Yeah. Now, actually, maybe we'll start here. We are still bullish. When you've got big news like Visa starting to use USDC and Ethereum to settle crypto or to settle transactions, one of the things that we note is that all of that positive market sentiment is not actually yielding huge end result in the market itself, right? So the market didn't all of a sudden shoot up 100%. And this is one of the ways we can clearly tell, aside from the innumerable of other ways we look at the market sentiment, is that we're actually fairly well into this. 13/19ths the way I think about it. And one of the things that's important, I think, during this moment is to really pay attention to the idea that market cycles repeat. Yeah, that's right. So we like to start off with Bitcoin, usually around the 4 to 6 hour, currently around the 4 hour. We are above our nice long-term trend line at the moment. We did have a little bit of a day, well, as on my birthday week vacation here, where we slipped down to around 51,000. And we jumped right back above that long-term support line as well, quite quickly. There's many reasons for that. If you're in the private group, there's a bunch of data we posted in the trade setups area about the reserve risk ratio. We've gone over this multiple times, I think, as well on the live stream, but I like to write my sentiments, and I think it's easier to digest for you, a lot of you as well. So if you're in the private group, go check that out. But let's kind of go over this again today. Right now, everything looks healthy in the market. Now, when we go to the daily, there's some things I want to look at just to kind of rough sketch some ideas around the edge. Ooh, the internet is having a little bit of a difficult time there. You're not going to load here, internet? Really? You're going to do that to me right now? You're going to be that way? What is this? Oh, really? Can't be. Let's try this again here. Let's look at Glassnode and see if the data is loading on Glassnode. I'm not sure why it's not loading for some reason on TradingView. It's not loading Bitcoin at all. Okay, that's strange. It's loading all the other ones though. Okay, so maybe it's just a thing on TradingView right now. Okay, let's jump over to Glassnode, then we'll skip that. So Glassnode, one of the things we like to do kind of consistently to measure the market sentiment is look at how much Bitcoin is coming onto the open exchanges. And one of the things we've gone over is this exchange balance percent stacked. And over the last month here, since the beginning of March, we've again done nothing but go down. And every now and then we see these little tick ups. Right here, this is when the supposed F2 pool was dumping their supply. Scared FUD nonsense stupidity. Yeah. Miners sell Bitcoin. That's why they're in business. So of course they're going to sell Bitcoin. They're not dumping. That's literally their fucking business model. So let's simplify this. They sell Bitcoin. They make more profits. They take that profit. They rebuy more miners. They update their security. They hire more personnel. And before you know it, they're mining even more Bitcoin that they can sell later into the future. We had this big drop off of supply, and this seems to happen almost every time that the market of price of Bitcoin drops. Here on these dates, October 30th, that was the first time it dropped from like 19,000 down to back to 16,000 and created a new trading range. And every time we've had a big market drop, an enormous amount of Bitcoin gets bought up off the open exchanges and then turned into hard wallet or cold storage and this is what we've gone over in the past with the reserve risk ratio. You can find variations of this. So the reserve risk is a way to kind of measure where we are in the markets based off how long the Bitcoin that's been on the market and is being held in wallets and how long those wallets have held that Bitcoin for. The longer the wallet has held Bitcoin for over 6 months, the more likely it is that Bitcoin is going to stay put for quite some time. And the RR ratio here is using a mixture of that. Now, if you want, you can go and you can type in hands the red, wrote a nice metric article about it here. I believe it's on Medium. You can search it by just typing the reserve risk ratio to kind of get a deeper dive onto the sentiment if you want to know more. And in our previous bull market cycle, when the amount of Bitcoin that was being purchased on the open market started to dip into the 1 to 3 month area, the risk relationship went up dramatically. And as we can see here in the RR ratio, we're pretty much right dead way through the center of this bull market. It's not till I pull back in through 2017 that you can actually even see that, comparatively speaking, the reserve risk ratio right now is like pretty much dead center, or you could say by 9/18 or 3/6 the way through the bull market. And even though the price is extraordinarily high and running into this new area, the amount of Bitcoin that's being bought up on the open market on a day-over-day basis is very, very powerful. I think tens of thousands of Bitcoin. So what we like to do is kind of make a few aggregate focuses by going through this. So the stock to flow model is another way that we've done this in the past. And remember that this is only valuable if there is demand, and clearly there is demand. In 2016, 2017, it was easier to argue that the stock to flow model wasn't extremely relative. But here we can again make conjecture that because miners' business is to mine Bitcoin and then sell it so that they can stay in business and be profitable, the stock to flow model represents the cost of producing Bitcoin, from energy to network cables to the new ACE miners that they would have to buy, to their attorneys and their accountants and their physical locations that they have to store all this stuff. So we had an average price of Bitcoin around $6,000 for how much it costs to be created in 2018, 2017. And for quite a while, we actually kind of moved right along this $6,000 line, and that's where the majority of buying and selling took place on the point of control as well. Right now, where we are in the market, we've actually caught up very quickly to the stock to flow model. And now that we know almost like very clearly that there is some serious demand in this sector and it's likely going to continue, what we start to see is that the stock to flow ratio has us around $100,000. And this is important for a few reasons. Again, remember that it costs probably around $100,000 over the next 2 to 3 years to produce Bitcoin based off the miners' reward relationship in again, all of the physical locations, the hardware, the personnel, all of that. That costs around $100,000 in the Bitcoin model to produce. So back in 2017, we had this massive explosion of price through went straight through that model and then shot up to around $20,000 and then dropped back down and really started to aggregate again around the production cost of Bitcoin, because miners are producing tens of thousands of these Bitcoin and have actually accumulated a very large amount of them as well. So a big part of the question is, well, how high do we go? And I don't actually really care. A lot of people are like, oh, we're going to go to this absurd price, or we're going to $1 million and it's a super cycle. Well, first off, in my opinion, when you hear people talk about super cycles, Dan Held, fucking stupid. No, that is incorrect. That's actually a sign of the times that we are in the bull market and be near the end of the bull market, because that's just pure stupidity. Human nature doesn't change. In fact, it has not ever changed. That's why we love the Wyckoff method so much, is because we're charting human nature. Human nature is very specific, based off profit to reward or greed and euphoria relationships. So Bitcoin could go to $280,000 and then likely collapse back down and aggregate around $100,000 for the next 3 years. But what I wanted to point out today is if we are going to make a stupid cycle far out conjecture, in 2029, June 2029 has the stock to flow model at $14 million Bitcoin. That's basically the cost to production avenue here. And if you think about where we are now, and then Bitcoin at $14 million just 10 years from now, that's not a lot of time. And a big part of what we want to do is build the most sensible long-term investment plan, right? A lot of Bitcoin maximalists like, oh, I will only buy Bitcoin because that is just the best investment ever made. Well, no, the reason why that's true is because you didn't buy Tesla as a seed stage and venture capitalist. But had you bought Tesla as a private equity investor, the returns were fucking astronomically high. Not since it IPO'd. You're not measuring the rest of the growth of the company from private seed stage. And that's where we're at right now. Companies like, any number of the companies, if you go to arcanebear.com /club, you can see our aggregate portfolio for our treasury at the moment. And we have investments in multiple companies, and those are seed stage. And what I really, really like about this idea is that These are asymmetrical bets, which means the downside is they go to zero. The upside is almost infinite. And that's what Bitcoin was. Bitcoin in the early days of 2008, 9, 10, 11, 12 basically was a seed stage investment into a protocol-like company. Now, we could ignore the idea that Satoshi Nakamoto was a pseudo-anonymous person and that the developers were all working off the fact that they just loved the idea of Bitcoin. But fundamentally speaking, take Fetch, for example. We've been investing in Fetch in our private group for the last 2 years, and it did over 5,000%. That's 5 times better than being invested in Bitcoin. Now, if you're a Bitcoin maximalist and you don't understand what that means, I hate to say this, but you're kind of an idiot, right? We're here for alpha. I'm not just invested in only Bitcoin because I think that this one thing will change the future. No, it's usually like a suite of products that change the future. It wasn't just HTTPS, it was IMAP, POP3, and all these other variations and protocols that make the internet that we effectively use as consumers today. So I'm interested in the aggregate, and venture capital gives you that potential where you can make a small investment and get 50 times the return rates of your initial capital investment. So, okay, Bitcoin is still not loading here. I wonder what's up with TradingView right now. Let's try this out one more time here. Maybe they're just having a data problem. Let's see, does the other Bitcoin chart work? Damn, son. Okay, well, let's, if I can't use the Bitcoin chart right now, let's just kind of quickly go over everything else. Ethereum, again, talking about settling transactions via USDC for Visa and MasterCard probably as well. I saw a really nice big correction. I feel less worried about this shakeout. And again, this is why patience is so important, guys. Like back here, we saw this first big shakeout. I was like, oh, I'm a little worried. We're going to have to wait and see how this recovery goes. And the first automatic rally was perfect. We ran right into resistance. We've gone back down. We've back tested the $1,500 area. And now we're starting to break above that. So things look good, but we don't want to try to predict the future, right? So as things are happening, we're constantly changing our thesis of where we are in the markets. So when Ethereum kind of dropped in and had this really strong shakeout point, and we saw a massive amount of supply come into the market, it was a little worrying for me. This was a little worrying. I'm like, oh, this doesn't look good for Ethereum. But here we go. This recovery, this new secondary test that we've seen now looks very positive for Ethereum, and we now see Ethereum at $1,900. Right, so I'm not a maximalist. I believe venture capital is one of the smartest things you can do as an investor. If you're part of the private group, if you check out yesterday's private webinar, a private member who would put a few $1,000s in Link that's now worth over $500,000. That's the power of venture capital. And you couldn't have done that with Bitcoin, period, because you were too late to the venture capital entries. You can still do well, but not that well. And that's important. Now, Bitcoin is less risky at this moment. It's still very volatile, but it's not extraordinarily volatile like it used to be. It's not going from pennies to hundreds of dollars anymore. To go from 100,000 to $1 million or even $14 million it's not a whole lot compared to what these others have done and can do because of where they're starting, which is back at the early days of seed stage capital. So it's nice to see Ethereum rebound here and be super strong throughout this trading range. Because again, I was a little worried here at this primary shakeout. I was like, God, we got look how close we came to the point of control on the previous trading range, right? So this new growth here likes me. Me likey this secondary test here and this new growth that we're seeing through the trading range. So very strong indicators that the bull market in Ethereum is going to continue. Again, we talked about melt your face moments here, and people are like, oh, it didn't melt your face, it dropped back to 1,200. It's like, motherfuckers are so impatient. Like, God damn it, guys, we've been here for years and you're worried about like 10 days of price action. Put your big boy pants on. Get ready to play the game for the long term. I'm not here for like a 5-minute session. Anyways, I'm a little sweary today. I had a great week. It was my birthday week. Had a great night last night too. Maybe that's why I'm a little sweary today. We're not here for a 10-minute fuckboy session, right? This is we're here to play for the long term. So Ethereum looks really healthy right now. Avalanche has been slow to recover, actually. I've been really really impressed that it's taken this long for Avalanche to kind of rebuild its recovery. Although, mind you, we're up an extraordinarily high amount from our first entries. I thought we were going to see a lot more price action sooner. When we first had this this sign of strength come out here on this reaccumulation after decline, I thought we were going to continue up to $55 quite quickly. I still believe Avalanche has a great future ahead of it, especially because everything that's built on Ethereum can function on Avalanche. It's kind of my hedge against Ethereum. Cardano sits in that space as well, but I really thought we would see price action in Avalanche move much, much faster. But this might be because of there's like a lot of good news for Ethereum. Even I tried to do a transaction on Ethereum the other day. It says, oh, $385 fucking gas fee. Are you kidding me? For a fucking contract layer? Like, Jesus Christ, you can hire a lawyer to do the same thing for cheaper. And that's really what Ethereum is supposed to do, is replace the lawyers and be cheaper. And it's not right now. So we'll have to wait and see what it does. Link, guys, you know, I'm bullish on Link, but ultimately Link's well along its bull market phase. We're getting extraordinary growth at a Link now is not like a great bet, right? So I'm not heavy in Link, but I do hold it as part of my position. M-Stable, we've been accumulating the last 2 to 3 weeks, which is really nice. Good to see our first sign of strength come out of this box here and starting to close above the previous trading range here too. So for those of you that are new to the channel, if you're just tuning in and you've never seen what we do before, first off, it requires an extraordinary amount of homework from your side because you need to know what we're talking about. But we like to trade with Wyckoff's trading range. It shows a lot of really beautiful sentiments around supply and demand characteristics, and it's worked out extraordinarily well for us. M-Stable is one of the ones that Tech Team put on our table a while ago. Again, I've been accumulating more and more of it. Somewhere probably close to around 7 to 10 grand in M-Stable at the moment. Aave, I started accumulating this last week during my birthday week as well. You can probably see why here. This looks like a beautiful reaccumulation after decline. And again, for those of you that want, you can go to the Arcane Bear group. You can sign up for our private membership, and you can look at the Wyckoff trading ranges. The reaccumulation after decline can be a little bit deceiving because it's generally viewed as not as a powerful reaccumulation schematic, but these bull markets have just been so ridiculously strong that I'm not too worried about seeing this as a comparison. And I think that this is what Aave is doing right now. Look at the characteristics of the features here. Here's the top portion of your trading range. Here's your run against the creek, and here's your secondary trading range down in this bottom area here. They look almost fundamentally identical. I believe we are in the final kind of backup phases right around the point of control here before it breaks above 427 and continues on its way. So we're going to be keeping a close eye on a lot of these trades. And remember, from a venture capital perspective, we're betting on asymmetry, which means like, great, whatever I have in Aave could be worthless, or it could be worth 1,000 times more in the future. So I make my investments accordingly. Very, very simple philosophical concept that if you understand, you will become extraordinarily successful. So I really hope you do take the time to research and study what it means when I say asymmetry, or I talked about fractal mathematics, because there's a lot of people who've done extraordinarily well in the markets and they never made YouTube videos, but they did win Nobel Prizes, right? So it's usually who I read and who I follow. And they made a lot of money doing that as well too. Band. Nice to see Band kind of jump right back up off the top. So here again, we're seeing this kind of SOS backup, and this kind of widening megaphone pattern. And here we could have made a conjecture that, oh, the megaphone pattern was invalidated because this small amount of time below the widening megaphone here, but that's not the case. Again, I've been accumulating more Band. We'd already taken our initial positions back down here to around $7. Because I was late to the game on Band, but I've been accumulating more Band in this region for the last week or two as well. FTT token. First off, guys, if you don't yet trade on FTX, go to arcanebear.com/FTX and the link's down below. It is by far the best fucking exchange for managing a portfolio and growing your wealth. I highly suggest it. It is a great place to play. And because of that, I actually started accumulating the FTT token, which is the native FTX token. It allows you to stake and get discounts and cheaper maker fees. You also get included in their launchpad basket. It's the same reason why we invested in Binance Coin back in August as well. And I expect we'll see kind of similar returns and results from here too. KNC, Similar to Band, we're seeing this widening megaphone pattern, and again, this kind of signals to me that this is why we're near the finality of this bull market. Is these are the kind of the last stages before it goes parabolic, and then also usually generally breaks down not too far after. We've stayed above the majority of the previous trading ranges SOS, and we're seeing strength here as well. Not the strength in the supply characteristics yet, but we did see that on the previous SOS. So as we start to basically hold above $2.50, $2.40 here, I've been adding more to KNC, although it's much lighter. It's probably only around $5,000 that I've got in KNC at the moment. Anyways, it's just, I like to make small venture bets on lots of ideas. Some of them I lean much heavier into, for instance, Avalanche and MStable I've been leaning into, even the FTT token, just because of the results that it offers for me using their exchange. SNX, I kind of like this here. And again, this is kind of the interesting part, right? Here we see a widening megaphone pattern and a falling wedge into what appears to be a new trading range. I do suspect we're going to get a break above this wedge here soon, and then above the POC, and we're going to see a nice big explosion back to the top of the widening megaphone pattern. And a lot of the questions that you guys have asked in the private den were like, does this invalidate the megaphone pattern if we have a break below it? And I don't think it does. Again, I haven't been in the markets forever. I'm only 30 something years old. I'm just going to say 30 something now for the next decade, I guess. I'm only 30 something years old. And although I've seen a lot over the last 10 years as an investor and as a trader, I don't actually always know. We might see, we should start by saying that in general. I actually don't always know, in case anyone was wondering, like, I get stuff wrong. Like, clearly I've gotten some things wrong in the past, but we have a lot of really, really powerful strengths in this market, and one of them has been this trading range identification. And this horizontal trading range, to me, is actually more important than the widening megaphone pattern. And I think that if we have a dip out here and break back above, we're going to see something very similar to what we were just looking at with Band, where you see this momentary lapse below the trading range in the widening megaphone pattern for SNX. So I've been accumulating more synthetics here because I was a little late to the market to getting synthetics. Balancer, very strong, nice widening megaphone pattern as well. We could make conjecture around this position. I took most of my positions in February for Balancer. I added a few more this last week. And 1 inch. 1 inch looks fantastic to me right now. Again, I think one of the interesting things too is if you jump over here, if you take a look at 1 inch, but basically, if you look at Uniswap, SushiSwap, and 1 inch, the idea that 1 inch is brought to the table about aggregation of the use of other platforms is extremely powerful. And they're offering cheaper fees than Uniswap. And so is now SushiSwap too. So this kind of lower transaction fee relationship, especially in the world of decentralization, it comes across as a noticeable highlight of value, right? Like, where are you going to go? Well, where I get the most bang for my buck. So 1 inch has done a great job. I've started building a position in 1 inch, and you'll see probably pretty clearly here why. I do believe that this is another reaccumulation after decline, although again, this is not always the most powerful sentiments. I'm not going to bet on like getting it right. I just need to be close to right on a few of them, and things work out well. So I've started to build a position in 1 inch. It's only maybe a few $1,000s at the moment, but I hope to get it higher. I do have some in Uniswap as well, but I'm kind of betting against Uniswap just because they were venture capital driven, and this sector over time has always been participant factor driven. Anyways, I don't know. I've been accumulating more 1 inch because of that. And this looks like a nice trading range to me. And even after they did like an $80 million airdrop, the price declination here was not that noticeable. And that's a powerful sentiment to me. If you give away $80 million and your price only drops like a few percent, like if you look back what happened to Uniswap when they gave away their first airdrop, it dropped dramatically. It was like 80%. Here we see only a 40% aggregate basically drop in price and reaccumulation through the bottom of the box. So, and currently above the point of control. Rook, again, if you guys are interested in studying more of our venture capital stuff, I definitely suggest you sign up to the Arcane Bear private group, but we will be giving away big chunks of our research for free. Now, this area is not totally done yet, but if you go to arcanebear.com keeperdao.com/club, or just by going on the screen here, you can look at everything we own in our portfolio. Now, 1inch has not been added to this yet, but you can go to KeeperDAO and you can start to see some of our initial research on what the fuck is a KeeperDAO. I'm not going to sure if I'm going to keep this title, but for now I'm like, it's just so ridiculous. I'm interested in financial potential, alpha, I guess is an easier way to say it. But I'm interested in how the kind of the back end of the financial systems might work, and KeeperDAO is one of these ideas. Now, clearly the goal is to actually get in at seed stage, but that's not always possible. Sometimes relate to even recognizing that there was something cool there. So the Rook token, you know, whether I don't necessarily suggest anyone buy it. Obviously, this is not financial advice, but more interestingly, it's the governance side of these stories, right? So the Rook token is a governance token where actually using KeeperDAO by going through and adding liquidity is I think one of the more interesting aspects of what KeeperDAO does, right? So you have the token, which is for the governance, but more importantly, what KeeperDAO can do through its financial applications. So you can do your own homework, do your own research. We've got a bunch on the table that are like this. KeeperDAO just happens to be one of them, where you can go through, you can aggregate liquidity and get some, well, it will trade for you basically to some degree. I'll leave it as that. It's pretty simple, I think, but it's also very complex. So take a look at KeeperDAO. I'm just going to quickly roll through most of our venture capital bag because I'd like to. And again, here with KeeperDAO, we're kind of running up right against the point of control. And it looks like we're seeing a falling accumulation pattern too, which we've gone over. We could make conjecture that this was the spring. You see a significant amount of volume or supply come into the market. And now the first kind of sign of strength in the supply itself as well, and how we've just kind of cuddled up against the point of control. Kava is another one that we're fans of. And again, from a venture capital perspective, you remember asymmetry. The beauty of asymmetry is that we know it's volatile, we understand that it's volatile, we invest based off that understanding of volatility, so we limit our cap size based off that understanding, and we recognize that through time, over the next 10 to 20 years, these could be worth 1,000 times more than they are today. And that's a really smart thing, a really great way to run your thesis. So we took most of our original Kava positions, again, a little late to Kava, but when it comes down to venture capital, as long as I'm in the market, I can start to build my position through time and or decrease that position through time based off the success or failure of these ideas. So currently, we added more here. This went in our private newsletter back in the beginning of March. And I actually added a little bit more too on my birthday weekend. The girl I was hanging out with, she's like, "Wait, come get massages with me." And I'm like, I'm busy. I'm working. I'm writing PDFs. So I don't know how to take time off, apparently. Solana was also another one that we added recently. If you are in the private den, you will see this nice, beautiful trading range. We added most of our positions below the point of control. Again, late to Solana because there's a beautiful widening megaphone pattern that took place here right out of the back of December, which we had seen a bunch. I'm ultimately bullish on the entire market until the market cycle ends, and then we get to see who the real strong leaders are. Like, remember, during Bitcoin's bear market, Link performed extraordinarily well. So it's not always the case that the bull market ends and everything ends with it. Some of these, when they have the strength, they will continue. So Solana's become a decent chunk. I've got a few more $1,000s in there at the moment. I'm trying to aggregate different prices and think of about the next 10 years of positioning. I was late to Solana, so I'm not trying to get like $100,000 position in Solana or DOT today. It doesn't make any sense. Like, just throwing $500,000 into DOT today doesn't make a whole lot of sense. Doing it in December made a lot of sense, especially as we saw this widening megaphone pattern, which we love so much. But here again, we also see, well, look here, DOT broke right below the bottom of our widening megaphone pattern. And the question is, does that invalidate it, or are we actually finally seeing the spring before we see the SOS and the breakup pattern? And I do suspect that's what we're going to get. So I've kind of started to build the positions in DOT because there were some I was late to, right? The majority of our plays were in Matic, Fetch, Seller, One, Harmony, and Raven. And Avalanche actually at that point as well. Bitcoin, Ethereum were obvious candidates, but I mean from a venture capital sector. I did buy some sushi Again, if you look at the beauty of this widening megaphone pattern back here through December, extraordinarily powerful signal to recognize, especially through the bottom of the trading range. This is why we constantly try to help educate everyone on, well, what is A, venture capital, and B, where are you in the market, so that you can be the most successful through those understandings. So I added a bit more sushi as well. But again, I'm not taking huge positions because look how high up we are. The risk relationship right now is extraordinarily high. I'm not trying to access like hundreds of thousands of dollars in sushi. I just want to make sure I have a footing or a position there at all to begin with, because that's how the venture capital thesis ultimately functions the best. No one would have been able to convince me that in 2013, had I put $1,000 into Doge, it'd be worth $500,000 today. Or in 2017, had I put like $1,000 into Binance Coin, it would be worth a few $1,000,000 today. So I just do that on frequency. I find the ideas I like. I form a big basket of plays that we do research into, and I make investments, and then we share that information, and we also sell kind of the deeper dive information of that as well. So remember, guys, the early investor, the disease and the sickness that you always run into is over emotional trading and lack of education. And the best way to cure that is by joining a group of people who are interested and focused on the same thing. So the level of accountability for yourself through time increases, because it's usually what people get wrong is that the bear markets are the most fucking exciting time, because that's when you can accumulate everything for pennies on the dollar. People are like, oh yeah, the bull market is going up. I don't care. I love the bear markets because that's when I can accumulate all these undervalued assets while everybody else is paying attention to their fucking iPhone. So I'm excited about the bear markets and the potential that we see going forward through our venture capital fund and our thesis here ultimately. So really, really looking forward to that. You can look at any of the number of investments we've made. Here, there's a few that have not yet been added. But again, what we're going to do is we're just going to dive in. We're going to do deep dive research. So if you find yourself to be an adventurous person, like trying new things, go to arcanebear.com/private and sign up for the private group. We have over 900 private members who are always working together, charting together, making their own thesis and investment. And the most important part there is that the long-term accountability usually gets you to show back up during the bear market, which is the most fucking exciting time for investments, but the least exciting time for price appreciation. Anyways, we'll leave it at that. Let's deal with the Arcane Bear. Thank you guys all for joining us today. Remember to go to the links or follow us. What is this? On YouTube? Follow us on YouTube. Give us a thumbs up if you enjoy this content right now. Go to Twitter as well. Check us out. Check us out on Twitter and LinkedIn, Instagram, or any of those fun places. Although Instagram, I usually just post photos of me and beautiful women. I don't know what else Instagram is for, to tell you the truth. Maybe I should be posting memes, but I'm not a very good memer. Should get better at my memes. My meme skills need to advance significantly. I should be studying memes for the next few decades, because that's such a powerful way to transfer occult information. Anyways, this is something I think that should be it should be very, very exciting for you, no matter where we are in the markets, just to really come to understand the depth of value here. Mr. In Crypto says Uni and 1inch are two different things. Yeah, clearly, I know that. And Uniswap isn't a protocol. There are both protocols, a DEX aggregator. Yeah, it's the same, kind of the same thing. They're not the same thing, but they're kind of the same thing. Like a car to 4 wheels is basically the same thing. Works for me. Could you cover the super chat question? Ricky V says, hey Tio, when you talk about stock to flow model, what if demand in 2028 isn't high enough to cover the cost of mining Bitcoin? Yeah, well, we'll deal with that in 2028. I don't want to try to predict the future. I've always said that. I just try to move day by day. If for some reason we start to see a dramatic change, we'll deal with that then. But I can't make far outlandish conjecture about the future when we really don't know. Other than we have a kind of a simple answer that the stock to flow model puts us at $14 million Bitcoin by 2029. So there's that. Kind of last thoughts here. Is it worth using Uniswap for Celsius? Token fees are so high. You know, I'm not a big fan of, like I said, guys, I don't use Uniswap right now. I'm managing most of the portfolio on FTX. arcanebear.com/FTX. Sign up. Seriously, I'm getting like 30% interest on my USDT right now. It's fucking amazing. Like every hour, more money just keeps showing up in the account. It's frigging ridiculous. And you just, anyway, so definitely check out FTX if you are not an American. If you are an American, you'll have to use ftx.us, and you don't have access to things like Avalanche because, you know, land of the free, home of the brave. You get access to only the things the government tells you that you are allowed to play with because they think they know what's best for you. That's why I live in a foreign country, and I operate financially in a foreign country as well. Anyways, to you with the Arcane Bear. Thank you all for joining us today. I'm very grateful for your guys' support, and I'm also grateful for the haters. You keep doing your thing out there. Keep stressing and keep flexing. You do you. I'll do me. You want to buy Gucci? I'm happy buying a $12 NASA shirt. Whatever makes you happy. It's what I feel. Anyways, I'll see you guys in the next episode. And wait, hold on. What is this? Bam.